Okay, so in this video we're going to go over some longer term investments. Okay, so let's start off with Pfizer. So Pfizer's offering a really nice entry here around $29. So we've pulled back around 50% from the 2021 highs, and we've been in a really solid downtrend. And it looks like Pfizer's just finally cracked this downtrend, broken above the 100 and 200-day moving average. It looks to be consolidating to move up. The last sort of bit of consolidation around here, I'd expect price to move above this $30 and possibly making runs all the way back up to the highs. Okay, so Pfizer does pay a dividend as well. It's around a 5% dividend yield per year. That, coupled with the fact that Pfizer is one of the largest pharmaceutical companies out there, I think it's a pretty safe bet to say that buying on a 50% discount of one of the largest drug manufacturers out there is not a bad place to be parking money for sort of a long-term perspective. Okay, so those of you more risk adverse might want to be booking profit along the way, or at least raising stops along the way. But with the dividend yield and a 50% discount, I think Pfizer's a really good buy at the moment. On to the next one, so Intel. So Intel's been in the news quite a bit lately. Had quite a big drop after the last earnings announcement. It's reading it from a chart perspective. We do have some support going all the way back into 2010. So this is the sort of price that we're on at the moment, where if you bought in 2010, you'd be at the 14 years later, you'd still be at the same price that you bought Intel at. So very big discount at the moment. But if you're thinking of somewhere to be putting money for like a yearly time frame, Intel is very undervalued at the moment. And with America wanting to keep chips in the country rather than Taiwan Semiconductor, with the geopolitical risks over there, I think Intel should be, for a long-term perspective, it should be a safe place to be parking money, especially if you're buying down at these levels at 21, 20. Okay. And then on to the final one. So we've got the MJ ETF over here. So really cheap at the moment, just around $3. It was back around $40 back when it sort of opened up, and these meme stocks like Tilray and things were trending. Since then, people have fallen out of love with those sorts of stocks. And we've pulled back all the way back from $30 down to $3 here. So considering that more and more countries are moving to legalize, and it's probably going to be a bigger industry if you're thinking from a yearly time frame perspective. Again, I think this is another fairly safe place to be parking a bit of money. When I say safe, I think this ETF could go to zero. So whatever you're investing into this, you've got to be prepared to lose it all. But as a bit of a gamble for something that in 5 years' time or 10 years' time might be a much bigger industry, you're buying at really low levels here. So again, quite risky, quite a risky move here. A lot of this is going to be based on politics and whether how legislation starts moving through in certain countries. But for the price it is, and for the sort of news that it has and the potential it's got to move back up, I think this is a nice little play to park a small portion